price down today or yesterday for Bitcoin. What happened to Bitcoin over the weekend? We saw prices go all the way down to 93,000 US dollars from 102,000 at the closing price for Bitcoin, the highest closing price we have ever seen in Bitcoin ever, I think. Actually, that was the highest closing price ever for January for Bitcoin ever, and that's pretty incredible. And of course, whenever you have something like that happen, you can only, this is my new saying, you can only make so many people millionaires before they cash out. And that's kind of what you need to be thinking about, especially on these smaller meme tokens, these smaller cryptocurrencies and so on. You can only, everybody has their price, right? The thing is there's a lot of people that have a much lower price than you, right? If you're spending $4,000 to $10,000 on power mining Bitcoin, you know, making 10 grand isn't going to seem like a lot to you. But if you are, you know, working at Starbucks and in college, obviously 10 grand is going to seem like a ton to you and you're going to sell it. That's pretty much just the name of the game. And the strategy is to make sure that you're fully aware of that and consider all positions in life and all possibilities, right? And I think that we saw a little bit of that over the weekend. Of course, there's a lot of different reasons. We're going to look at Cointelegraph here and see what they kind of think about it. And then we'll kind of spur off of that, right? So Bitcoin, which is now over $100,000 again today, by the way, dropped over 5% over the last 24 hours. And this is written, of course, on Sunday, to 95,279 US dollars, leading to declines across the crypto market. This comes after US President Donald Trump announced tariffs on imported goods from Canada, Mexico, and China. So the key takeaways are that Bitcoin's drawdown followed Trump's new tariffs on China, Mexico, and Canada, and other top cap cryptocurrencies were also down, exacerbated by massive liquidations across the crypto market. Bitcoin price needs to hold above a key support area to avoid deeper correction. Of course, it did hold. It didn't have a deeper correction. And all of this FUD surrounding, and I call it FUD because there's no evidence for a price below 75,000 like a lot of people keep trying to say. Here's the other thing. It's the same concept. You can only take away so much money from people before they start pumping the price back up again. And way too many people have bought in over the $90,000 mark. And I think that that's important to take into account. You know, panic selling because you're afraid it's going to keep going to 75,000, or, you know, not selling when it's up at like 102,000 or above. These are all things that, like, you just need to think about from the perspective of other people that are in the market, right? This is the problem I see with kaspa as far as mining goes. Because mining doesn't have as much emissions as Bitcoin, it doesn't impact the price as much of kaspa. Like, mining barely impacts the price of kaspa, and you can only make so many millionaires, and there's so many wallets with over 1 million kaspa. The likelihood of kaspa going to, you know, basically $1 is extremely low right now, because there would be so many people wanting to cash out and become a millionaire as it goes further and further, and they don't have the influence of the miners controlling the supply. This supply is going to, on the Bitcoin side of things, is obviously diminishing further and further, and miners are having less and less control over the price of Bitcoin, and it's going to basically get to the point to where the miners at some point, probably in 2 cycles is about my prediction right now for Bitcoin, we will see a complete removal of the influence of the price from miners. Maybe not a complete removal, but a pretty significant removal of the influence of miners over the price. Or what will happen, which is a possibility, is that fees will reach parity with, of course, the block reward, and at that point everything will be very stable. That would be the best outcome, right? But that's still up in the air, however those two play out. That's how I see it playing out over the next 8 to 10 years, right? Bitcoin, which is held above $100,000 since January 17th, was trading just above $95,000 at the time of publication. Key points are that Bitcoin was down 5% over the 24 hours, not that much, and dropped as much as 9.7%. And the low was actually lower than I saw at $93,000 to $91,530 on February 3rd. The decline followed Trump's announcement of 25% tariffs on Mexican and Canadian foods and 10% levies on Chinese imports set to take effect on Tuesday. Now, this is what they say it is. I'm not so necessarily sure. Look, here's the thing. Every single time we see a huge price correction in the price of Bitcoin or a huge pump in the price of Bitcoin, we get all of these, external factors blamed for the results of the price of Bitcoin. And the fact of the matter is I think those have a lot less to do with the price of Bitcoin than just your normal everyday trading analysis, etc. Right? So, and even the trading analysis, right? You'll hear people kind of like draw their lines out, and then obviously it doesn't match up to that. All of these things are good and important to consider, but I think the actual influence of the price of Bitcoin from the announcement of the tariffs is probably a lot less than we may think. Just like, and I'm going to remind you guys of this, just like all of the pro-crypto announcements from the Trump White House at the beginning of the month didn't have near as much of an impact on price as people expected either, even myself, right? So I have to admit and take a step back and look at things objectively and say, well, is this really going to cause, a panic sell down to 75,000, or is this really going to cause euphoria in the market to 200,000 within the next 30 days? And the answer to both of those questions is more than likely no, objectively, right? That's just because it is the way it is. Objectively, you can look at it. You can see historically what the price has been. You can see that it seems to be on a 4-year halving cycle pattern. It seems to still be holding up as far as that is concerned, and the power law is affecting it still at this point. I'm not saying that it will post 10 years from now, but it is still at this point, right? So that's kind of the way I look at it. I think that the macro there, and I'm not saying like a macro cycle or a super cycle or anything like that. I think the super cycle is way far down the line. But if you take a look at the macro, the chart patterns are still the same, right? So some key points are that approximately 465 million in Bitcoin leverage positions have been liquidated over the past 24 hours. And more than $389 million of these were long Bitcoin position liquidations compared to 75 million that were shorts. Bullish traders are forced to close their positions when long positions are liquidated. And obviously we've talked about, leveraged positions, especially leveraged longs and leveraged shorts. They're very dangerous to play around with. Of course, people do find success with them. I famously, leverage shorted kaspa, and that paid off. And so sometimes they can pay off, but it's never going to be something that is for certain, right? And the problem is that when you have these types of trading behaviors from the market happening, the effects to the supply and the volume and all of that, right, is quite pronounced. It's a lot more pronounced than it should have been if those options weren't available. And so I think when we see these huge kind of corrections like that, it's because of these highly leveraged positions that make it more impactful, right? Especially on a Sunday when Bitcoin's kind of the only thing trading, or crypto is, and you have the rest of the market shut down. I think that also, pushes a little bit more effect onto that particular space, as in crypto, because, crypto's open 24/7. Now, Bitcoin's price dropped further due to cascading liquidation effects like we talked about, and the scale of the liquidations mirror December 20th, 2024, when more than 419 million in long positions were wiped out, accompanying an 11% Bitcoin price drop, right? So the initial price drop is not influenced by longs and shorts necessarily, but the degree to which that happens is influenced by the leverage positions. So basically what I'm saying is when it does go down and it falls below that line, it's kind of like a cascading effect, like they say here, and the dominoes are getting knocked over and it kind of just collapses all of those longs, and it's going to have a more pronounced effect on, of course, the price of Bitcoin. So it did say that holding above the 100-day SMA level would help Bitcoin reclaim the 50-day 99,000 US dollars, which of course it did, and that the RSI at 38 points is nearing oversold conditions, increasing the chances of a possible recovery in the short term, which we did see. Now, commenting on Bitcoin's latest price action, popular trader Dan Crypto Trades explains that the asset could chop in a wide range over the next few days, with 90,000 acting as support and the upside capped at 108,000. So what does that tell you as a miner, right? Let's think about this here for a second. When should you be selling your mined crypto to make sure you can cover your power bill? Does anybody in chat know? Because I can give you the marker at which you probably should, right? If you're trying to make sure you can cover your power bill, going above that 108,000 and waiting for that when you have a bill due 30 days from now, probably not a great idea, right? You want to be basically trying to capitalize on whenever you're profitable between that $100,000 and $108,000 price point, right? And that means, of course, it has to be dependent on the efficiency of your equipment, the price of your power, all of that stuff taken into account. But you don't want to be sitting there on a bunch of Bitcoin that you've mined waiting to pay your power bill. And then guess when everybody's selling crypto? Do you guys notice a pattern? It's always the end of the month. Go look at December. Go look at, look at January. Go look at December. Go look at all the months beforehand. November. When this happens is always right around the exact same time of the last few days of the month. And that's because, well, you have large cryptocurrency projects, crypto specifically, you have large miners as it pertains to Bitcoin selling off to cover costs and basically working out their books. Now, it's even worse and more pronounced on a quarterly basis, right? So at the end of every quarter, you can see a little bit more of a correction, that sort of thing. But little sell-offs to cover your power is not a bad thing to do, especially right now when everybody's teetering on that profitable and unprofitable phase. And it also means that if everybody's kind of staggering those sell-offs, it's going to be less pronounced and there'll be less likelihood of something like a long cascading effect, okay? And that's important because the higher close that we have at the end of every month, the more of a likelihood we have of Bitcoin's basically capped upside increasing, right? So if we have, 102,000 close and then the next cap, on the upside's 108,000, maybe at the end of February we see 104,000 close, and then there's basically an upside cap of 110,000, right? Theoretically. I mean, that's obviously not real numbers and no trade analysis at all whatsoever. It's just an example of the idea behind it, right? And you don't want to cause any of those sell-offs because then you're hurting your own mining profitability. And this is extremely important, especially on small cryptocurrencies. Things like Warthog, if you're mining that, things like everybody's power bill is usually due around the first of the month. Well, if every small cap miner that mines Warthog is selling all their Warthog at the end of the month, it's going to drive the price down and you don't want to be irresponsible as a miner and literally hurt your own profits, right? Like that's the entire point. It's better and healthier for the network to sell off at a staggered rate. That's just, it's healthier for the network. It's more reliable for your income. It's better for everyone involved. Let the traders take the risk, okay? Mining isn't about taking that risk. Mining is about generating the revenue, and that is it. There's no more. If you want to spend your profits on anything, right, you could hold, but buy more miners, right? That's kind of the idea behind it. You are specifically, a cog in the machine of cryptocurrency, especially as it pertains to Bitcoin. And you just got to know your place. We've talked about this a ton of times before. I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.